We are back at the question of whether the death cross was confirmed in Toronto or not. What January numbers tell you is that the start of the year isn't looking good. However, if you were watching my predictions and previous videos, none of these are a surprise to you. At the end of the video, I'll go through my own calculations and charts that I promise you won't see anywhere else, and I'll discuss the death cross in real estate market in Toronto while no one else wants to talk about it. But before that, let's see what the actual heck is going on in the market and make the numbers make sense, shall we? For those of you who don't know me, I run one of the top real estate groups in Toronto. My videos are all about real-time market data combined with first-hand insights from the field. No fluff, just straight facts to help you navigate the market. I'll leave the timestamps under this video so you can skip some parts if you need to, or if you want to rewatch a part, you can find the information quickly. If you have any specific questions about the market, you can book a meeting with me or my team using the link in the description. And one last thing before we dive in order to support us to make content like this for you, please make sure to subscribe and hit the like button. That will help us to create more educational content for you. I'm gonna start with my first go-to chart, then after that we're gonna talk about the detached homes, then condos, and then after that we're going to talk about interest rate and buyers behavior, and then rental market and the impact of economic and political uncertainty, and then we're going to talk about what no one wants to talk about, the death cross and what it means for Toronto. And finally, my predictions for the rest of 2025. These predictions are about what you can expect to unfold the rest of the year. Alright, this is the high level chart that I'm going to use today. This chart is for the city of Toronto. We're going to take a look at the numbers, sales numbers. As you can see, about 25%, 24.59% of the sales have been detached homes, and about 53% of the sales were condo apartments. Of course, here we have a little bit of sales. For example, 7.9% condo townhouses that can be counted as condos as well. As you can see, from the 25th percentile and 75th percentile, this information tells us that the most sales, let's say 50% of the sales in Toronto, have been selling between $590,000 and $1,167,000. So this is where the most action is in the city of Toronto. From the price brackets, if we look at the $500,000 to $700,000, these two bars, you can see that these are the most popular price brackets that have been the busiest among all the properties in Toronto, which I'm gonna tell you. I can tell you right now, let me show you. These are the price brackets that are selling mostly condos. We don't have any freehold detached in these price brackets, but I'm gonna show you right now. As you can see, 90% of these, the properties within $500,000 to $700,000 are condo apartments, and 6% of them are condo townhouses. And we have a little bit of like freehold townhouses and in the outskirts of the city, of course, but majority are condos, condo apartment and condo townhouses. Let's talk about the detached homes first. It's not a surprise that we see that the majority of the sales in the detached homes are between $1 million to $1.5 million with the recent CMHC rules about the insured mortgages. Basically, those people who could get an insured mortgage up to $1 million, now they can go up to $1.5 million with, let's say, 10% down payment. So that was a huge boost, and we were expecting that it's gonna prop up the properties between $1 million to $1.5 million, because before, properties that were listed under $1 million could go through CMHC, but now the properties above $1 million and less than $1.5 million also could go through CMHC. There are two very interesting facts that I would like to tell you. If you look at this chart, you see that the average days on the market for the average type of properties, like everything in Toronto, has been 39 days on the market. So slightly above 1 month, let's say closer to 1.5 months. But when we look at the detached homes, you see that detached homes average days on the market is closer to 1 month. But when you look at the condo apartment, look at this, it's a month and a half. Those who are selling a condo right now, those sellers who are selling a condo, they should expect to sit on the market for a while. So as you saw from the charts, the Toronto real estate market in January provided clear insights to us into a shifting market dynamic. So one of the defining features of the January 2025 market was the significant rise in the available homes and the standing inventory. While seasonal trends usually keep inventory level high in the first quarter of basically every year, this year's numbers were particularly eye-catching. So in terms of number of listings, I can tell you we have a surge in the new listings and inventory. And as you can see in the charts, Toronto's condo market in particular saw a sharp increase in supply. And one of the reasons for that is the completion of several major condo projects all across the city of Toronto, mainly in downtown Toronto. So what does this mean for the buyers? More inventory means more choices, and in many areas meaning more negotiation and negotiating power for the buyers. But for the sellers, let me tell you this, higher inventory levels create pricing pressure, particularly for the condo sellers. Condo sellers may need to price aggressively, to price their properties aggressively to attract buyers. So despite the concerns that a flood of new listings might push the prices downward, what we have seen in the past few months actually was that the market has remained surprisingly stable. That doesn't mean the prices are not downward. That means that a lot of sellers are resisting to accept the new reality, and they're resisting to drop the prices. And again, as we looked at the detached market in the charts, we saw that the detached homes basically are holding their value. As you can see, the detached home price in the 416 area was $1.58 million, which has increased by 1% year over year, which is not bad. It's much better than the condos that have been falling by 2.4%. And one of the reasons for the demand in the detached houses, as I mentioned earlier in the video a couple of minutes ago, is the CMHC, basically high ratio mortgage threshold that was increased to $1.5 million. Let's talk a little bit back about the condos. So as I said, condos are facing a more competitive market right now. The average condo price in Toronto is about $691,000. And the condo prices have been remaining slightly, let's say, in the past 6 months at least, have been remaining relatively flat, even though that if we compare the prices year over year, they were down by 2.4%. But in the past few months, if you look at the condo price trends in the past few months, let's say from September to now, they remain relatively flat. However, with many units sitting on the market, I think we're gonna have a little bit of more downside pressure on the condos. I don't wanna say all bad news about the condo market. The thing is that with the number of sales that were dropping in the pre-construction sector, meaning that 4 or 5 years from now, we are going to have less condos delivered to the market. I recorded a video on that one, on that topic, that you can go watch it here, that with the less pre-construction sales, what will happen to the condo market in the next 3 or 4 or 5 years. So you can go watch that video, and I'm not going to talk about it in this video. Now let's talk about the interest rate and buyers' behavior. The Bank of Canada's recent interest rate adjustment played a major role in shaping buyers' behavior. So mortgage rates dropped to the mid 4%. When I'm talking about these kind of mortgage rates, this is not what the banks are offering here. We're talking about insured mortgage rate with very specific criteria. But I heard something below 4%. So anyways, the mortgage rate dropped to closer to mid 4%, and that helped basically to ease affordability concerns for the many of the buyers out there. So lower rate attracted buyers back into the market with increased activity, as I showed in the charts, in 800 to million or to $1.2 million. If you're looking at the detached home and freehold properties, between 1 million to 1.5. If you're looking at the condos, the price brackets between $500,000 to $700,000. You can go back and watch that part earlier in the video. So lower interest rates should help fuel the demand in the second half of 2025, because I expect more cuts coming. But again, that depends on a couple more factors, which I'm gonna cover in another video. But for now, let's say I expect a couple more cuts coming into the year and possibly second half of the 2025. But what I can tell you for now, from working with my own clients, I can tell you right now, buyers are still cautious and selective. They're coming back to the market, but they're still cautiously moving. So that's enough for the purchase and sales. Let's talk about the rental market. What we see is that with many potential buyers still delaying their purchase, the rental market remains in demand. Another interesting thing that I see is that many developers are converting unsold condo projects into rental buildings, which may help ease some of the supply crunch that we always had in Toronto. Of course, during the season, let's say for example in the winter from November to February, we don't feel that supply crunch and we see lots of properties up for rent. But when it gets to June, July, August, that's the time that people feel the supply crunch, especially those tenants who are looking to rent a property in the summer months. So when I'm talking about the supply crunch, I'm not talking about today's day. I'm talking the whole year on average. So for those investors who are holding rental properties, these few winter months might be slow, but once we get to the summer month, end of spring, beginning of the summer, that's the time that we are gonna see the supply crunch and more tenants moving around to secure rental apartments. So based on what we reviewed so far, for those who are considering buying a condo, this year 2025 could be a year that you can strike a deal and be able to negotiate down the prices or negotiate your terms, let's call it that way. Whether it's the condo is for investment purposes or you're an end user and want to buy a condo to live in it. Let's go to the next part, the impact of economic and political uncertainty. Outside of traditional market factors, larger economic and political uncertainties are at play. Whether we like it or not, that will affect the Toronto's real estate market. And not only that, it's going to affect our day-to-day life here in Canada. I had another video recorded on the tariffs that I suggest you go and take a look at that video as well. As you know, US tariffs and economic policies are causing hesitation among some buyers in the market. The Canadian government's housing policies and affordability measures may also influence how the market evolves after the election later this year. The Bank of Canada's approach to further rate cuts will also have a major impact on whether 2025 shapes up to be a true recovery year or not. Buyers and sellers alike are navigating these unknowns, waiting for clarity on where the economic policies and interest rate will land. Now let's talk about the debt cross. All right, let's go to the monitor and take a look at the debt cross chart. So let's take a look at this chart. This is the chart that I calculated and generated from the information from January 2000 till end of January 2025. So this chart is for the past 25 years. As you can see, this is when the global financial crisis happened in 2008. And as you can see, even in 2008, Toronto's real estate market didn't fall in the death cross. That's very interesting. But look at these numbers. I'm gonna zoom in. I mean, it's not easy to zoom in these kind of charts, but I'm gonna zoom in for the past 7 years. Look at this. This chart suggests us that from the September 2024, we have entered the death cross zone. So basically, death cross, what does death cross mean? Death cross is a signal that tells us about the long-term bear market. And let me tell you something, from September 2024, we have entered the death cross zone. So we have received the signal, but again, this chart is about all property types in Toronto. I'm gonna divide it into two separate charts. Since this video is very long at this point, I'm gonna just tell you, yes, we are in the death cross zone and it is a signal for a long bear market. But there are two very interesting things about the death cross. First is that if the death cross is confirmed and the signal continues for a long time, it's going to be the beginning of a long bear market. However, if the death cross bounces back up and it confirms that bounce, that would be the signal, the bottom signal for that specific market. Again, these charts are average properties based on average prices, all property types in Toronto. In order to fine-tune those charts, I need to do a little bit more calculations. I'm gonna record another video or maybe two other videos because there's a chance, or let's say there's a property type that can save Toronto's real estate market to get out of the death cross and put an end on this bear market. But we need to get the confirmation on that by the end of the spring market. So I can't say for sure what will happen by the end of 2025, but by the end of the spring market, I can have a more clear idea of what will happen if the bear market is gonna end this year or it's gonna continue crushing down the property values here in Toronto. So make sure you follow and hit the subscribe button to get notified when I record the next videos about the death cross and if this is going to form a bottom or this is the beginning of the long-term bear market. Now let's go to my predictions for the rest of 2025. So what's next? Looking ahead, several key factors will shape Toronto's real estate market for the rest of this year. The first one would be, in my opinion, the demand will pick up in the spring and summer. Historically, the second quarter of the year is the most active period for real estate sales. With interest rates continuing to drop, we expect more buyers to enter the market by mid-2025. Detached homes are going to have a strong demand, particularly in areas, let's say for example, around central Toronto, or Peel region, let's say Mississauga, those areas, and Durham region, let's say Whitby. So I expect the detached home demand stay strong. Regarding the condo sales, I don't have very good news for you if you're a condo seller, but I think condo sales will remain slower. Discounts and incentives from the sellers may create buying opportunities for the buyers out there, condo buyers out there. And again, I think more first-time home buyers will re-enter the market because of the lower borrowing costs that we most probably are gonna see going into the second or third quarter of 2025. Another prediction that I have is that the price growth this year will be modest but not explosive. So unlike previous years of double-digit price increases, Toronto market in 2025 is likely to increase moderate price growth. Again, that is only we bounce back and we get out of that death cross. I give a high chance on that, but I cannot confirm it until the end of the spring market. And if this year the prices start going up, the only thing that is saving this market is the detached home prices, which may go up this year by 3 to 5%. So my next prediction is about the interest rates for the rest of 2025. So I expect the Bank of Canada to cut rates further, possibly bringing the mortgage rates down to the low 4% and or even mid to high 3% by the end of 2025. So as you know, lower rates will increase the affordability and encourages buyers to act sooner than later, so it's gonna prop up the market somehow. However, the inflation concerns and the government intervention could influence how aggressively the rates are cut. Remember that. For buyers, this means that locking in a mortgage in mid to late 2025 might be more favorable than waiting until 2026. So the next prediction was again about the condos. Condo supply crunch will start not this year, but probably sometime mid to end of 2026. So I expect the condo market behave the same way that's behaving right now, the whole 2025. So I don't expect any huge growth in the condo market till maybe end of 2026 or maybe 2027. As I mentioned to you earlier, I have another video recorded on what will happen in the condo market by the next 3-4 years. And by the time that we see a real upward pressure on the condo supply and consecutively condo prices, it would be probably end of 2027 or around 2028. So if you're a long-term investor, this might be your best opportunity to secure a condo before the market shifts in a year or two. My next prediction is that the immigration will still continue to drive the housing demand. I don't think we're gonna see much changes in the Canada's immigration policies. So I think we're gonna have immigration as one of the driving factors when it comes to the housing market. So my final thoughts, 2025 will be a year of opportunity. While the Toronto real estate market still faces some uncertainty, 2025 is shaping up to be a year of opportunity for condo buyers mostly, of course. So with the right strategy and market awareness and educating yourself through videos like this, 2025 could be a great year to make a move in Toronto's real estate market.